Welcome to aminacademy.com. In Aluminium Bird, let us discuss about aircraft fuel cost is more than how they get profit. Then the major expenses that affects the airline industry are labor and fuel costs. The major expenses that affects airline industry are labor and fuel costs. Labor costs are largely fixed in the short term, while fuel costs can swing widely based on the price of oil. It is because of this more attention is required to fuel costs. Two-thirds of the cost of flying an aeroplane is fixed, so changes in fuel costs can swing a flight from profit to loss depending on passengers on board. Historically, the airline industry continued to be brutally competitive, even though air travel has become an integral part of life. The cost of flying continues to trend lower. Internet has also created greater price transparency and has reduced margins. Labor accounts for approximately 35% of the total of operating expenses of the airlines. During downturns, management looks to cut labor costs by laying off workers or reducing pay and perks. Maintenance, spares, labor, handling luggage, airline fees, taxes, marketing promotions, travel agent commissions, and passengers' expenses all accounts for nearly 55% of the total operating cost. Fuel cost and operating expenses. Most companies try to hedge fuel costs. They buy future contracts to lock in their costs for a set period of time, turning it into fixed expenses. When fuel prices rises, this behavior is rewarded. When fuel price decline, it's punishing. The worst time for airline is when oil prices spike. The period from 2009 to 2014 saw improving economics and oil prices that slowly climbed higher before. Fuel saving options. There is a need for a comprehensive view of total fleet operational fuel consumption. Aviation operators need to have insight into current fuel usage through all phases of flight. This visibility enables better decision making to reduce fuel consumption, cost, and emission, and giving an opportunity to decrease fuel consumptions. Special software can analyze hundreds of parameters derived directly from the operational data and help flight by flight comparisons to each fuel saving initiative. Need for technological investment. Airline needs to focus on technological investment and developments, operational improvements, and alternative fuel use to reduce fuel consumptions. Fuel consumption is measured by passengers kilometers per liter of fuel or liter per 100 kilometer per seat. Growth of computer technology and the microelectronics revolutions allows full authority electronic digital controls of aircraft engines. The smart engines has huge magnitude of computational power. Flight data is tracked and in real time and helps making minor changes to flight plans to and aircraft speed to reduce flight time and fuel consumptions, improve engine efficiency, reduce maintenance time and cost between flight and also the life cycle cost. This can result revolutionizing flight efficiency and profitability. Fuel efficiency summarized. Lower fuel consumption will provide airline with economic advantages. It is also environmentally important. In the event of increase in fuel prices, airlines will have to increase ticket prices. In this case, the demand for the airline will decrease. This will be reflected in revenue losses, decline in sales, and market losses. All this makes it imperative to save fuel. Now let us discuss further detail about aircraft fuel cost is more than how they get profit. Look at these reasons. Passengers Aircraft achieve profit through combination factors including ticket sales, ancillary revenues, that is additional service like baggage fees, and cargo revenue. Dynamic pricing, load factors, and efficient operations and also play a crucial role in maximizing profitability. Dynamic pricing. Airline adjusting ticket prices in real time based on demand, time of purchase, and competition, aiming to maximize revenue. Load factors. Airline aim to high load factors, that is the percentage of seat filled, as this spread fixed cost across more passengers, increasing profitability. Revenue passenger miles, RPMs. Airlines measures their effectiveness in selling seats by calculating the total number of revenue passengers miles, which helps track revenue generation. Next, ancillary revenues. Additional services. Airlines generate revenue through fees for baggage, seat selection, in-flight purchase, and other services. Loyalty programs. Loyalty programs can increase customers' engagement and repeat business, contributing to profitability. Cargo revenue, belly cargo. Many airlines generate significant revenue from carrying cargo in the aircraft's belly compartment. Cargo optimized flights. Some airlines even optimize flights to maximize cargo capacity, potentially reducing passengers' capacity. Operational efficiency. Fuel efficiency investments, fuel efficient aircraft, and efficient routing help reduce to largest operating expense for airlines. Streamlined operations, efficient ground handling, crew scheduling, and maintenance practices minimize downtime and maximize aircraft utilization. Predictive maintenance, using data analytics to identify potential maintenance issues proactively reduces downtime and increase reliability. Strategic partnerships, collaborations with other airlines, airports, or service providers can lead to cost saving and revenue opportunities. So far, these all factors affects the cost of the ticket, as well the aircraft providers get benefits. That means profit. We have done. Please subscribe our YouTube channel.